Hello, Jim here. Today I want to talk about one of my favorite option strategies, and that's the option wheel. I did a video a couple weeks ago where I talked about four companies that I was going to run the wheel on and just see how I did with those four. I'm still running that. I'm going to also talk about those particular trades and where they currently stand. And then I have what I think may be a better trade that can earn a lot more money than picking four different companies and doing four or five different trades. So I'm going to talk about that. I also wanted to mention today's a pretty down day. We have a bit of a correction going on. I don't know if it's going to continue. It may just be something happening on Halloween, and then maybe we have a bounce back tomorrow. But I would not be surprised to see kind of a mini correction. Maybe the market continues down tomorrow and in early next week until we get through the election. I do believe there's a lot of uncertainty related to the election. So again, no telling what's going to happen. The one thing I've learned about the market over the last couple of years, it's very unpredictable. I also wanted to touch on interest rate cuts. We're going to have another cut, I believe, in November, probably a quarter point. I think inflation is still a concern, and unemployment is not as bad as they originally thought, but also not as good as it could be. So I think they're going to stick with a quarter point and then probably another quarter point in December. And then they may kind of hold to that level for a while, depending on how next year goes and, what other things might be happening in the economy. So just wanted to share those. Let's jump into the next part of the video, and I'll share with you these trades and these two additional companies I want to talk about. I think it's going to be well worth your while, so be sure you stay until the end. Before I jump into the particular trades, I do want to talk about the two companies that will be making up my new wheel trade. The first is Nvidia. It doesn't really need introductions. Great company. It's a little bit pricey. Even though it's come down quite a bit today, its PE is still 49. So I would prefer to see them have closer to a 35 PE, probably be closer to $100. And they were there not long ago. They dropped that low back in September. But if there's a company out there that warrants a higher PE, it's probably them. They have outstanding quarterly earnings. You can see it's just nice hill there. Just every quarter they're doing better and better. They're not increasing as much as they used to. So if they beat earnings but don't blow them away, they potentially can get hit hard and drop quite a bit. Growth here, again, you can see very good revenue year over year growth. Forward-looking growth is unbelievable. A plus for growth. Even profitability is also like an A plus. They're very, very profitable. 123, almost 124% return on common equity, 62% return on assets. Just doing very, very well. If we come over here to Schwab and we look at them debt-wise, I don't think, do they pay a dividend? It doesn't look like they pay a dividend. Actually, they do pay a dividend, very small dividend, but 4 cents. But they are actually paying a dividend, which is interesting. Now, their earnings here, again, you can see they're increasing nicely. They have very good margins. The earnings per share growth has been phenomenal. And debt, about 10 billion, a little less than 10 billion, 9.7. They actually have been paying down debt since last year, and then their equity is 42. So it's like a 25% debt to equity ratio. So every dollar of debt, they have nearly $4 in equity. So overall, a very, very good company. Now the other one, we'll jump back here, is Micron. And we'll pick it over here. It's MU. This company is a little bit riskier in my mind. They were losing money earlier this year. Now they're making a lot of money. And that could switch in another year or two. So you have to be a little bit more careful. They definitely are a bit more risky, but they're also not way overpriced. Earnings per share is nearly $9. Their PE is 11. So not crazy PE and not crazily overpriced. So if we look at their earnings, it's quite surprising. They've been going up So here's the loss, and they've been steadily going up each and every quarter, and they've been beating earnings every quarter. So 368% increase potentially second quarter. Next year, third quarter, 276. So they're going to go up to almost $2 a share in second quarter 2025, even higher, $2, almost $2.33, and then $2.83. So earnings doing well, profitability is good but not great. It's not as good as Nvidia, but especially the return on equity and return on capital. But they're producing a lot of cash, and every other measure is doing pretty good. Let's see, what other stuff can we look at? Let's come over here and look at their debt. There we go, Micron. And they pay a little dividend too, but you can see here they've kind of turned things around. I'm not sure why they were losing money not too long ago. Debt-wise, $9 billion on $45 billion in equity. So another about 1 to 4 debt to equity ratio. So overall, a very good company. And I like the fact that they're not overpriced. Both of these companies have very good options, open interest and premium. So if we look at like November 15th, it's 3,000, 4,000 for open interest, good volume, not as high as Nvidia. Like if we look at Nvidia, it's pretty substantial. They probably have the best premiums of any company out there. We haven't even gotten to the break even. So, 58,000 contracts at 130. So you typically can do quite well with both puts and calls for Nvidia. So with that being said, let's jump into the next part of the video. I do like to mention, if you're interested in my membership or want to learn more about it, details will be in the description. It's growing nicely. Lots of people are sharing their trades. My memberships are kind of a little bit different than a lot of other people's. I don't require a call with me first before you join. You can join. You can come and go as you want. It's relatively not hard on the budget. So it may be worth your while. You might want to take a look. That being said, let's jump into the next part of the video. Now, for those of you who watched my video a couple weeks ago, these are the original trades. I made a few modifications. These were the 4 I wanted to run the wheel on just so I could see how the wheel worked out. I did trades in Chewy, Square. One of the Twilio trades, I originally was going to do two different trades in Square, but I already had a Twilio cash secured put, so I rolled it and I'm using the premium from it. So this whole table is related to actual trades. And then I did a new Twilio trade at 65. All these expiring in 11/15. They were all more like monthly, right around 30, 35 days for DTEs for them. And all of them brought in pretty good premium. So if you look at total here, it's $965 for the put premium. The call premium I just shared so you could see if I get assigned at $27.50 for Chewy, I could turn around and pick up $145 selling a call at pretty near the same strike. I believe I went to the next higher strike. Same thing with Square. I could turn around, and Square really had good call premium. I believe it was an up day, but I could turn around and sell a covered call and make $640. So, if I got assigned at 65, my cost basis would be more like 62. Then if I could turn around and sell a covered call anywhere near 640, it could be very profitable very quickly. And then required capital, I also have ROI based on each one of these. And again, these were monthly. Weekly didn't really make sense with them. And then pins, cash secured put. It was the only trade that I did that was a new type of trade for me. I had never traded Pinterest before. And it also had very good premium for a $33 strike. I brought in over $200, which is, in my mind, quite amazing. And then this is the required capital. The call premium was also quite good. It didn't have as much open interest and volume, but it was okay. I don't think I'd ever have a problem trading it or rolling it. And then all of these came up to 965 with the interest of 9604. That's the 4.61 that Fidelity paid. So it'd be like making 1,061. And this would literally be just these trades once a month. And then yearly income would be 12,743, and then total capital 24. And what I talked about the previous time is weeklies didn't work well for a lot of these companies, especially Chewy. So that's why I decided to do it monthly. And this is using the nearest to the money for both puts and calls. They stay above the cost basis. And that's really critical for selling calls, covered calls, to stay above your cost basis. You don't want to be taking a loss on a, especially if it gets called away. That can happen if a stock majorly drops and you're already own some covered calls. You could end up, if those covered calls are below your cost basis, then you could end up taking a loss on them. Not all would be a sign. And currently, only Twilio went through the roof. It had good earnings, and I think it shot up $8 to $10. So I might close those because they're very profitable. The other two, I believe Chewy is slightly in the money, and Pins is also slightly in the money. So I'm thinking I'm going to continue to wait. I've got 2 more weeks come tomorrow, and I do have some members who also did these trades, and I believe I think one person had Pinterest assigned to them and someone else had Chewy assigned to them. So, and that's the interesting thing. You may have the same trade. It may be assigned to you, whereas the next person it's not assigned to. So now these are my new trades. These are with Micron and Nvidia. So I looked at, and this is literally from the option chain today. I looked at 11/8 expiration a week from tomorrow. 35, both of these are right around a 35 delta, the closest I could get to a 35 delta. The put premium was 206, call premium 435. And this was like a 99% return. For some reason, something happened here. I don't know, let's fix that. And then Nvidia, which again has the best premium of any. So these I could do weekly trades on them, whereas the weeklies did not work out well for the ones above. For 130 was the 35 delta. It's currently, what was it, 132, 283 in premium, and that's for weekly, so it's pretty significant. And then 590 for the call premium, so the call premium also for a weekly is really good. And it's like 102% return, whereas the Micron was like a 99% return. That's yearly adjusted for the year. So I look at what's the return for the week, and then I multiply it by 52. And you can see the calculation up above. Or actually, I do the ratio of 365 days divided by 8 days for the DTE. And it brought in 1956. When you consider if you could do this, you could make this, 489 every week. It would be 1956. The interest on those trades, just like the other ones, would be right around 96. Might be a little bit lower, 92. And then monthly income is 2,052. Again, with the total income coming from the premium and the Fidelity interest. So the yearly would be 624. And then I think this calculation, the yearly ROI might be wrong. Oh, it's based on 25. So if I base that on, I don't know why I didn't do that with, it would be more 22, 22,211? Yeah, 22,211. So I'm 111% return. So what did I learn from this? Down day in the markets, both MU and Nvidia are down around 4%. So the premium it might be unusually high today because the market's down so much. Weekly is good for both Micron and Nvidia, using around a 35 delta. So the biggest risk is a major drop. Like, what if the market continues to drop over the coming days and, Nvidia's in maybe around 100, 110. you could potentially take a bit of a loss there because the market has dropped faster than you would have expected. So how can you protect yourself from that? One is to avoid earnings. So maybe if you continue to do it weekly, maybe you skip a week related to earnings. You could also purchase some puts for downward protection. They would be more expensive than typically. So you could look at buying for this. You could buy maybe a 120 long put and maybe an 87 long put. And it would be more expensive, but again, it will provide you with the protection. If these trades go against me, I probably will run the test again and look at doing it with vertical put credits as spreads, because by buying the long put, you're really turning it into a vertical put credit spread. And you could also go with lower delta. So instead of this 35 delta, you could potentially use a 15, 20 delta, 25 delta. I'm picking 35 delta because I just want to see the additional premium. I also, my concern is less about Micron. I think Micron's pretty fairly valued. The 130 for Nvidia is a little bit high, but if I bring in 283, that puts me pretty close to 127. And then if I can, I could probably sell a 125 call and still bring in some premium if it drops even more. So it's still a bit risky because I think long term, or maybe not long term, but I do like Nvidia more around 110, 100. So I might, if this doesn't go well for me, I may use a lower delta. Can go with every other week or so. Instead of doing it every week, you could do like a 15 delta. So maybe do 2 trades a month, or like up above, you could do it 1 monthly. Just because of having a higher days till expiration, you can go with a lower strike. So say I did this monthly, I might be able to do 120 for Nvidia and maybe 92 for Micron. Just another consideration if you want to lower your risk and you're a little bit fearful with the current market. And required capital is based on the strike price times 100 minus the premium. So this is what I'm thinking about doing. It could potentially bring in a lot of premium. I don't know if I'm going to do it today. I might. But what do you guys think? Would you potentially look at doing this on a weekly basis? Are you already doing it on a weekly basis? Is there another stock that you would prefer to do it with? I try to answer all my comments, so please, add a comment below, and I'll try to respond to it within 24 to 48 hours. And as always, thanks for joining me, and I look forward to seeing you next time.